Welcome back to the channel, everyone. Great that you're here. If you are new to cryptocurrency, hit that subscribe button and hit that bell button. Do it right now. And also leave a like and leave a comment of appreciation. I am blown away by the amount of good comments I've been getting in previous videos over the last week. I really appreciate it. You are loved. It is awesome. Now, let's talk about the Bitcoin bottom. Is it in? Now, if you are a permanent bear and you are constantly going, oh, it's going to go to $1,800, stop it. Just come on. Rule 1 of trading. You go with the trend. The trend is your friend. You always trade off what you see. You do not go, well, it's at $5,800 now, but it's going to go to $1,800, guys. Come on, it's going to go there. It's not if you're just going to say it. You've got to back it up, and people do not back it up. Now, I'm going to put my cards on the table, risky, I know, and say, with fact, with opinion, with all the kind of stuff that is a credible thought that the bottom could be in. Now, when I say could, we have a very manipulative market. It's a very small market, and some elements could happen. We could have a catastrophic event where, I don't know, let's just say Tether completely buggers off. It could cause a bit of a ripple effect. Now, that goes without saying, but without me backing things up, it's kind of an opinion. I want to back it up with certain elements of fundamental analysis, which is what I believe strongly in over technical analysis. So let's just start. Let's go, and let's have some fun. Right. First thing I want to mention, the 6th of August, Litecoin is halving. That is one very big bullish sign. Why? Now, with Bitcoin, with Litecoin, there's a thing called halving, blockchain halving, where the block rewards for mining the actual coin itself to do the validation and the verification of the processes for the transactions. God, I get my words out. It would be halved, okay? So at the minute, 12.5 Bitcoin is given to the miners. That will be halved in May next year, okay? Litecoin is currently at 25 Litecoin per block halving. It is now going to become 12.5 in about 90 days' time, give or take. Why is this important? It creates a thing called scarcity. Scarcity is the kind of thing where demand meets supply. If there's less supply and there's good demand, the price is going to go up. It's like anything. Following so far? So, looking back, there's a video that I did about a week ago talking about Litecoin. I've done a few videos about Litecoin recently because it's really like important that people understand the concept of scarcity and halving. 9 months after the Litecoin halving, Bitcoin's going to do the exact same thing. The exact same thing. It's just going to go, off we go. Miners are going to get less. That is when I think the bulls are going to go mad. Personal opinion. I think, I'm not going to go too excited, but I think we're going to have the adoption wave. The wave of, not mass adoption, but the adoption wave. I think we've had the start wave, where the last bull run, where people were getting introduced. Ooh, what's this? I think the next one will be about adoption. More usage, more fundamentals of mainframe, not mainframe as a coin, as in mainframe blockchain development on companies' real use cases. I think that's I think that is what will happen in this one. I think we'll see more companies adopt it, more investors get involved, and more use case scenarios. That's what I think, personal opinion. That's just my opinion, okay? Not financial advice. After that, we've then got, potentially in 5 years' time, mass adoption, where everyone and the dog is using cryptocurrencies to pay for goods, bills, all that good shit. That's my personal opinion though. Right, so I'm going off on a tangent here. Anyways, I think the bottom's in because of fundamental reasonings. Now, the bottom, if I go to this chart, was here, about mid-December. Then we had the Santa rally. Woo, that was basically just a little mini retracement. We will do some TA at the end of this, just by the way. So at the end of the video, if you want to learn about TA, I will do some TA. I will show you some reasonings and thoughts as to why we are at certain levels, why we could bounce off certain things and come back down, and why we could carry on going up, okay? Cool. Now let's talk about fundamentals, because this is the thing that everyone ignores. Now, this is going to be quite meaty. You may need to get a post-it note or a pen, or just, I don't know, keep watching this video over and over, because fundamental analysis, in my opinion, is stronger than technical analysis, especially in a small market. It really is. When you're looking at this, everyone is very narrow-minded and they go, oh my God, it's just going to go to $1,800. On what? Because of the retracement ratio. It doesn't work like that. It really doesn't. Now, why am I saying this? Everyone's going off the last bear market. Oh, it did a 93% retracement. We're currently at 86%. That's where the bottom was. They have taken that number, going, all right, we're going to go to 1,800 because the last bull run, bear market, sorry, went to there. Doesn't work like that. If the fundamentals are strong, it's just going to show reversal anyways. It's just going to keep going. The stronger the trend, the harder it is to break out of it, essentially. So the stronger gets stronger. The fundamentals stick. The trend lines get better. They always bounce. The supports get stronger. The only reason why we had this free fall back in the day was because the miners decided to knock off. A lot of miners went whoosh, they turned off. Arguably, probably manipulation reasons, and it was all to save money. But a lot of mining pools were still going on in 2018. They were still going online, and the mining difficulty went up and up and up. It meant that the cost would eventually outweigh the mining revenue. So when the miners stopped with that support, which was 6k, woof, the free fall happened, which is where we're coming out of now. Now, this region here, we're going to talk about this region because this is the most important region ever. When you look at the hash rate, now we're on bitcoin.com. It's pretty cool. This is where things started to change. That region where I just kind of highlighted like that, it's this region here. The hash rates. What are the hash rates? It's where the usage of mining is starting to go up. The miners have turned back on. Now, the problem with Bitcoin is 2 weeks time, every 2 weeks, sorry, whatever, the difficulty adjusts for the hash rate. What is a hash rate? A hash rate is allowing you to kind of see how powerful the network is. The difficulty adjustment, which I'm going to get into in a second, actually right now, this is where it stopped and turned around. Ooh. The difficulty adjustment in Bitcoin is adjusted every 2 weeks. What it does is it is a freaking awesome system where it controls the cost of mining. Basically, the higher it goes, the more cost it's going to become. But that also creates revenue streams, and also it barriers as a support. Whenever Bitcoin does a certain element of a pump, this goes up with it. When it starts coming down, it also comes down with it. It's a bit of a bedrock, really, in the way it works. It's great for inflation. It's great to kind of hold as a store of value. And you've also got absolute scarcity to go along with that. That is why I believe in Bitcoin more than any other currency in terms of real use case of store of value. A lot of coins are going to become a store of value due to certain bits and bobs. I think Litecoin will become that as well, and I think Litecoin will do very well long term, same as Bitcoin. Obviously, Bitcoin's got a couple more years on Litecoin. Now, why is this important? The difficulty turns around, and when the miners start turning on and the difficulty gets to a lower point, they are now going to be profitable. Okay? When miners are profitable, they can then stack their coins, and then the transactions will change as well. They increase, which shows you this. This is the way that it's going. Now, this was the low ends of March where we had a bit of a dip, but if you go down to this January point here, we've always been going up, but we're starting to spike up quite aggressively now. We had a bit of a dip here due to obvious reasons. I'm not going to say anything. Bit of a free fall at that point, but ultimately we've started to rally back up again. The transactions per day is going up. What does that mean? More people are using it again. Interesting. Now, when you put that inside with difficulty adjustment, what does that mean? Well, people are starting believing again because the miners are in profit. If the miners are on board, it's going to mean cheaper transactions. It's going to mean faster transactions. Following me so far? I hope you are. Now, another thing that's also happening, the market capitalization of Bitcoin is starting to increase again. Woo! That means the price is going up, the market value is going up as a proposition, and investors are starting to get interested again. Now, that is another fundamental element of, well, isn't it going to come back up or down? Now, this isn't bulletproof by far. But when you look at the difficulty adjustment of Bitcoin, the miners are in profit, the hash rate's going up, the transactions per day is going up. The trend is getting higher. It's going to mean one thing. The support is there. And we're going to talk about support in a minute when we get to the technical side of it. Now, mining revenue, as I mentioned before, it is going up. This is the greatest thing about it. Look at the state of it. It's starting to go really high. This was that area that I highlighted like that in the chart. We've turned in the fundamentals of the absolute process of Bitcoin in terms of miners, their revenue, their processes are getting faster and better and cheaper, and also volume. Volume will be increasing due to this. Now, again, why is it all increasing? Because the whole trend of the market is still good. It's still fine. It's nothing, no issues at all. Why are people panicking? Manipulation, guys. The media will fudge you. They will rule you to ruin. Don't believe them. The Bitcoin wallets are still going up by the millions. Well, now let's go back to the chart. Let's do some TA. Let's look at certain elements of support. Now let's look at some of the technicals. Over 15 months ago, this pink line was broken. We are finally above it and trending way above it. If you were a trader in the same vein as me, I'm a longer term trader. I go for the daily time frame based on a very simple trend trade analysis, TA basically, and I get in when the coin's going up and I get out when it's going down. It's really simple. My area to buy or hold into Bitcoin was in February when this moving average, the EMA 8 crossed the EMA 20, was my buy signal. And what do you see? Well, you see a trend there. It is above the trend and it has been holding all the way since, and it's about 65% gain, I believe, maybe more than that. That's a crossover. So what you do is you get on the crossover, you wait for the pullback, and you look for support. When it holds the support, you enter and you put a low stop loss, a very tight stop loss below that moving average, because that is your support. That is where, if it goes below there, your government has gone wrong, you get out the trade. It's as simple as that. That's trading 101. Now, this, from there to there, you had no reason to get out of it. Now, people panic. People go on the 1 hour time frame. They go, oh! They would go to this region and go, oh my God, I need to get out. Well, you don't need to get out because you don't cross the line. You wait for the crossover. Yes, you are never going to get the bottoms or the tops with this method. No one does. Don't worry about that. It's all about the profits. 60% gain there. Now, that's just my basics of trading, okay? And I will do more and more information videos about this. But let's look at one element of support. This is the daddy. Why? If I just go back in time and go, oh my God, look how high we were. I'm scared of heights, guys. This was when it broke, the 12th of March region. Now, this chart is quite new. It's Binance, it's Tether. It isn't the greatest, I give you that. But ultimately, that is where we broke it, okay? Now, if you go back in time, in sequence, on different charts, if I go USD, here we go. This is the previous stuff. Now, if I just remove some of my noise on this chart, just to make it a little bit easier for you guys to see it. That'll do. Lovely. So that red line there is the bottom, by the way, if you're wondering. Now, if you look at this region here, bull run, bear market. It's obvious, right? Now, when you look at this, if I zoom in though, if you're looking at trends, it's simple. Now, that is obviously crossover. Even here, October 17, you could have got in at a great position at $4,000, and what happened after that? We flew to the moon. There was no reason to get out of it until you got to this point here, 14,000. You could have went, you know what, I'm out of here, 14,000. That's it, index, cool. You would have made a lot of money. Now, what else do we need to look at? We need to look at supports. Now, if you go to the weekly time frame, if I just reset this properly, there we go. You got to look for supports. Now, this here is resistance. This is the daddy. This is the bit we are on now. So, ideally, what we need to do is put a nice little line there. Cool. So, we're in this channel. So, you see here, weekly, boom. Crossover, we're into a good range here on US dollar. Now, the problem with this is, at the minute, there's a massive gap. There's a $200, $300 gap between Binance and Bitfinex. So, be mindful. But, in terms of levels, these are the kind of levels that we're looking at. These regions on the weekly, you can kind of see where we've stopped and turned around a little bit. See? Does that make sense? I hope it does, because not everyone understands all this stuff. all you're looking for is basic supports. And this is kind of the life cycle of Bitcoin in weekly supports. So we've obviously went from the bottom. We went to the top of these wicks here. So remember the 4,000 region? We were on there for a while. That was there. And I've just... Oh dear. Wrong way. There we go. There's a line there. So our next sticking point would be probably in the middle of this, 6-8, where some of these just topped and turned around. I've not done them all, as you can tell. But this gives you key levels to look at. Obviously, you're not going to use them all. You know, you just never will. Now, when you're looking at this, you've got to think, right, cool, where are we? You also need to look at the Fibonacci. If you go on to, say, the start point from here and go all the way across, you got to look to see where we've been. That bottom is right on a Fibonacci point, which is like, what? It's crazy when you look at it from that point of view. Now, that is just a very, very simple Fibonacci. You know, like, oh, we'll turn around. Like, where would we target? Well, you put a buy order there, put a buy order there, put a buy order there. But you wouldn't. You don't just put buy orders in there. You wait for turns, and you get off trades. Now, you look at this region here. It wicked off there. It bounced up, and then the following week it died, and it bounced back up. Now, as a trader, you probably would have lost that position anyways on the weekly time frame because it would have spiked so far down over that course of that week, but it obviously recovered. Now, you got to look at where things happen. Bounce, up, down, bounce, back up, down. You know, you got to look at these. They need to be used. Now, you go backwards now. You can do it from reverse and see from region's bottom. So you can go from this bottom here. You could do that. You can go, right, hold on a minute, what's happened? We'll go from this bottom to this top. If you understand how turns and dead cats work, you can target these regions anyways. That is a huge gain in a trade, by the way. Massive. Boom. It happens all the time. Now, let's go from the top to the bottom. This is where the bottom is. And I personally would be looking at targeting this region here. That looks like where we're going on a collision course towards 7,000, personal opinion. That's just using the fundamentals of the Fibonacci of a potential target area. But you can't really use a weekly time frame for that sort of stuff. You've got to go on at least the daily time frame, and you've got to look to see where these wave impulses are going. Now, if you're going to target an area, my first line of targeting would be 6.5, which would be this area here of resistance, okay? You've got to look at this. But when you're looking at going backwards again, backwards is the problem. You've got certain elements of support. Let's bring this back up. Certain elements of support is going to be the obvious. You're going to have the moving average, the EMA 55, sorry, the moving average 100 and the 200 and the 100. These are going to be your basic supports. Now, personal opinion, if this holds a support, as low as we're going to go is 4.5, which is quite a long way down now when you think about it. The same, 4.9, and then you got 5.4. These are basic supports. They're not great supports, but they are basic supports. But you've got this region here. That is a support there at 5,000. You've also got that region there at 5.2. But if I go to the monthly time frame, you're going to start seeing a bit of a, you know, a bit of daylight here. There's potential crossovers coming here, crossover there, uptick there. We are looking very, very good. Now, this was, again, the bottom held by the EMA 55. It's mental when you think about it. So, what does it mean? I think what I've just said in terms of where these have stopped and where the retracements have been and where they've actually went stop, it gives you a valid reason as to why the bottom could be potentially in. Not fundamentals, obviously, but this is looking very, very good. This is looking very bullish on that. They've got three closed bullish candles and one opened bullish candle on the monthly time frame. When was the last time that happened? Oh, wait. Very, very interesting. Again, same on the weekly. We've got the support and we're getting very much close. We're above the moving average 200. We never actually went below that, which is great on in terms of the bottom. So that could also be classed as a bottom. But we're now starting to get above all of them again. Crossover as well. So you could have easily bought there at 5,000, went long if you were trading on the weekly time frame. It is very obvious when you look at it. Now, let's look at a very quick sort of target area from this range here. Now, when you look at this, it's a big game. And when you're looking at targeting an area, you've got to look to see where the impulse wave's going. Now, I personally think this is quite hard to read. There's no real big impulses, if that makes sense. Apart from this range here, crossover, cross down, and then but it's still going up. It's not a full Elliott wave sort of trend. You can't really picture it. It's not flush. Whereas on this, it's kind of like it's rubbish really when you look at it. So I wouldn't be looking at using Elliott wave in any sort of element, but I would be looking at using the Fibonacci. I like the Fibonacci more than Elliott wave. I've always said that publicly. So you'd go from this region here up to this point across, and you'd like to see. Obviously, it's changed, but when you're looking at trading, you look at this and you look for a retracement point. This would be a top point where you think, well, it's turned around. We've stopped. You'd look for a retracement point from this candle, and you'd look at this area. Once it starts turning from this area, you go long again. That is how you get back in on the trend. But ultimately, when you do a kind of an extension, the top of that wave there could argue B1 and then this bottom and across. You go like that, and we are literally on the resistance of 0.76. So could we have topped out right now? I potentially think so. But this here, where 1 is on the fib, is right where this resistance is. So we could FOMO up to that candle and come back down, and we need a retracement if we're going to validate any sort of technical sort of stuff. The fundamentals are good, but the technicals need to also show a sign of growth, but also a pullback. There's been a few little pullbacks here. I think there's one due very, very soon. We could go to 6.5 and come back down, but if we do, say for example we do, so we say if we'll go from this point again, we'll go to 6.5 as an example. And if you are trying to FOMO in on that, don't wait, because it will start coming down, because there's a lot of heavy resistance here, a lot. Now there's heavy resistance here as well, so we may not even get that far, personal opinion. But if we do, you would want to target certain areas to try and get back in, but you'd wait for a turn. You wouldn't just go, I'm going to buy because it's going to bounce. It doesn't always do that. You've got to look and see where it could go. We could go as low as there. We could also go as low as here. But you just don't know. You've got to wait for that turn. You've got to wait for that reversal sign. You've got to wait for it to show on all the indicators, all the kind of elements in the news as well. So when you're looking for a reversal, last bit before I go away, you need to find something that shows a support. Like this, for example, support. Okay, it's easy to see it on the daily time frame when it's obviously gone. It's already been. But you just go to an easier time frame. So if I basically put a box, bear with me. Oh God, give me a box. Give me a box. On here. Here we go. If I look at this region here, okay, and I go to the 4-hour time frame, this region here, right? Let me just change. I want to zoom in now. There we go. So when you look at this region here, this is where it spiked up, and this is where it turned. Now, what you see on the RSI and the Stoch is an obvious turn. That, oh, it's holding. It held on the EMA 55. It didn't wick below it. It didn't close below it. You can look at that and think, right, support, that's turned. RSI starting to look a bit better in terms of diversion up. We're looking okay. But obviously, it wicked again. So we had 2 tests of that support, and then we went off again. Okay, we've obviously had a big wick here, but nothing really happened. But ultimately, we kept going. You've got to look for some sort of retracement turns. Now this here, it's quite a big drop. It doesn't look it, but it is a big drop. It's a good $400. You've got to look for strength. If you see strength in a support, you've got to buy it. If you see that this is held once and held twice, you've got to buy it. And then obviously you may get stopped out here, but you may have also taken profits here. So you've got to look at each situation, but look at the other indicators. That is a very, very strong indication that is held. You go long there, easy. It's like, it's obvious. It's like the Stoch is really, really aggressive. That is ticked up. That is ticking over. And that is held before previously. You just chance it. It's trading. It's all about the chance. It's putting the probability cause in your odds. So the odds in your favour, essentially. I've worded it really weird there. So this is a long video, I know. But I hope you've got some outstanding value from this. Understanding that I think the bottom's in. But ultimately, some levels you can look at. If you are looking to buy in, get on the 4-hour time frame as well, right? Last bit before I bugger off. You could start from this region here from March and just put a Fibonacci on it. You could just look at key levels. If we retrace, guys, you will be looking at this region here, and this region here. It's obvious, you can see it. It's prehistoric, you can see it there. So if we do start turning round, okay, and we are, this is on the Bitfinex chart, so redo your TA if you are on Binance. If this is going to turn here where we've stopped and we're coming back down, look at this region. If there is a sign of a reversal and a hold of support, go long and then get some profits out of it. Same again if we go down to here. Same region. But I personally do not think we're going to go lower than this region as it stands with the fundamentals. I think it's pretty strong. This here is very strong support. So this region here, it is now very strong support for me personally, along with all the fundamentals I mentioned with the mining and all that kind of difficulty stuff. So there you go. Oh, have a good weekend, guys. I may be here tomorrow, maybe not, but this is a very long video. I do apologise, but I hope you got excellent value. Hit the subscribe button, hit the like button, hit the thumbs up button, all that kind of good stuff, and I'll see you very, very soon.